All right, good morning, everyone. Tradingology.com's trading room for June 18th, 2020, getting the doors opened up. We have a mixed bag the way it looks so far today. Good morning, Dave. We'll go ahead and get you unmuted there.
Good morning, everybody.
How we doing this fine Thursday?
Another beautiful day in upstate New York.
Another beautiful day in the neighborhood? Well, the heat's still coming your way. We've been 90 for like 3 days in a row.
Oh, really? Wow.
Yep. I think we're going to take a little break this weekend, though. I think it's going to cool off a little bit.
I didn't see any heat wave coming. Maybe it cools down over the Great Lakes. Well, it's going to be up close to 90 today.
Turning the heat up. Just like Powell. So did you catch that interview that he did yesterday? Or whatever that was?
Yeah, interesting.
I was watching part of that. It just so happens it's the exact same time the market fell apart in the afternoon. Funny how that works.
Funny how that works, definitely. Well, another 1.5 million unemployed. And evidently there's a second wave of unemployment coming. I'm not sure what's going on, but they just can't seem to get away. I mean, 1.5 million, another 1.5 million. So I don't know. What are we up to now? 40, 50?
Like 35, isn't it? 40?
It's close to 40.
Hey, good morning, Andre. Yeah.
Morning, Andre.
That's why this is probably the first time that the report came out and it was more than forecast to the downside, right? They forecasted 1.3 and it came out 1.5 and the market actually went down because I saw a lot of the traders in the morning session grabbed a nice short on the ES. So that's a interesting change there. Usually the report comes out and the market rallies when it's down. So they finally went the right way. Like, what do you think about it logically?
Yeah. Good morning, Isham. Yeah, so I was talking with another trader the other day, and they said, well, we're really in the twilight zone. I think I mentioned that Tuesday. And, up is down and down is up. But actually it worked out because, bad numbers sold the market off. Boy, I tell you, if you pull up a daily chart of the Dow, I was looking at this yesterday, we could actually be like in a time period kind of like the 60s and 70s. You don't remember that market, I'm sure.
I do not.
Neither do I, because I was too young. I was still in
dailies.
I was still in grade school in the 70s. But it's kind of interesting because in the 60s and 70s, I don't even think you can go back that far on.
Yeah, I only have 20 years on my daily, so that only goes back to 2020 or 2000.
Yeah, you'd have to go back. You'd have to go over to stockcharts.com or something like that. But in the 60s and 70s, we were stuck in a range. Let me tell you what the range was. I can go over to stock charts.
100 to 300?
No, I think it was higher than that. That was the 1920s.
That's true. Yeah, maybe it was 1,000 to 2,000.
Yeah, something like that. I think breaking out of 2000 was a big deal. Let me pull it up here. If it'll let me. I used to have an account at Stock Charts because I like that RRG chart.
Right.
And I wanted to be kind of tweak it and stuff like that. But you know what? We don't really have any price discovery anymore. So I'm not sure anything is going to work in this scenario, right? 1960 to 1980. Because 20 years, basically, we were in a huge trading range. I found something here on macro trends.
Okay, I was looking on the free version of stock charts. I couldn't find where to manipulate it back yet. So if you're finding it, shoot it to me and I'll bring up a screenshot or something.
All right, I may just tighten this up a little bit. I'll go from, let's see if I can get this right. 1982, there we go. 1960, I don't want it on a log chart though. They got it on a log chart. Oh, there we go, take it off log. Okay. Huh. I mean, it wasn't that bad actually. Down in 1980, it did hit 2000. Just kind of didn't think it was actually up that high. But I will put this into the chat room or into the Slack channel. But we were stuck in a range for a long, long time. I mean, it was kind of crazy.
That guy. While that's coming over, we'll just take a quick glance. We're definitely a lot in the middle of the road right now.
There you
SD numbers, SD numbers. Okay, I see it. I'll grab that.
This isn't the best chart, but it does show that back in the, I mean, we hit it. We had that those numbers from about 2000 on the Dow Industrial Average in the 1950s. We shot up to 8, and then there was a huge bear market from like 1969 through 82. Look at that bear market. I mean, that was 1969 to 1982.
Yeah, World War II.
13 years, right? I mean, that was huge. We went from 8,000 down to 2,000. And we were basically stuck in that range from 2,000 to 8,000 for over. I mean, when we hit 8,000, we went down, but we were stuck between 2 and 8 for 30 years. A lot of people, I mean, nobody has that memory, right? I mean, there's not very many, well, there's hardly anybody.
Couldn't trade back then, right?
Traded then. What's that?
You couldn't really trade unless you were a very elite person with the money once they even allowed like a seat where you had to go and trade.
Yeah, I mean, it was, well, I'm not sure if that's the case. I know that you could call your broker and, you know, I mean, active trading, no.
Right. Yeah, if you want to do active trading, you actually had to like buy a seat for like $10,000 or something to go sit in a certain room to get access to the equipment.
Right, and then, but you could have gotten what they call a ticker at home, but those were very, very expensive. I mean, I think they were, I don't know what they were, but in today's prices, they're probably close to $1,000 a month.
Or you went to those shops that Jesse Livermore talked about and reading the tape there.
I think they eliminated those in the 30s too. but I traded stocks in 1974.
You called your dad's broker or something, right?
Yep. My dad took me down to Shershin Lehman Brothers, and they had a floor, the bottom floor of this huge commercial building downtown, and they had this wooden rail across the middle of the floor, and the customer sat on one side and the broker sat on the other. And when you wanted to trade a stock, you just go up to the rail and a broker would come over and ask you for your order. And I bought shares of Syntex in 1974. That was the very first stock trade I ever made. And I was 16 years old, so I couldn't do it on my account, so I had to do it on my father's account. And I bought it like around $14 maybe, $14 or $15 a share, and it ran up to 70, and I made pretty good money.
Well, it's a good thing you got hooked on that first trade, because we wouldn't be here today probably if you hadn't.
That's true. Yeah, that's absolutely right. It's day trading before I was born.
Yeah.
And the stock was Syntex. You know Syntex?
I think I researched it once after you originally told me about that, but I don't recall it now. Wasn't it like a bio or a pharma almost?
Yeah, it was kind of like a pharmaceutical company.
Yeah, don't do drugs.
They made the pill.
Oh, that's right. That's right.
So when I heard it on the news, I was only 16 years old. But when I heard it on the news, I said, "Wow, this thing's going to be hot. This is going to be a great company to invest in." I don't know why I had that thought that it was going to be a good company. I don't know why at all. What I didn't know was that the actual run up of the stock after the IPO was gigantic, was huge. And I missed that completely because that happened between 1970 and 1974. And in 2 years, it dropped down. So it was actually a beaten up stock at 14. I think it hit a high of like 150.
Wow.
So I bought it as a beaten up stock and I didn't even know at the time what I was. And it had a kind of a retracement back up to around 70, and I sold it. I bought
That's
it.
how you went back and looked and said, here's how that strategy worked. I did this without even knowing it, so I'll turn it into knowing it now.
Yeah, and I bought a motorcycle with the proceeds.
Nice. Nothing wrong with that.
Yeah. So anyway, I mean, that's the bear market that a lot of people don't remember. I mean, nobody remembers that from for 13 years we were in a downtrend.
So yeah, if you compare, like, see if I'll run this over here. Let's do it like this. I'll run this off. So we'll pretend like, this could be kind of now, right? This is what we've had. We had a run up. This could be like 2000. This could be 2008. Drop back down. Obviously didn't go far enough, but we've kind of been tripping. This could be 2018, 2016, 2018, then a run up in 2020.
Yep.
And then if you compare that, we might get another little peak. And then, chop sideways and start moving down. Very possible.
Yep. Had that big sell-off right there. You can see that it was very, very sharp from 6,000 to 8,000. That's a 25% decline right there.
And that's the difference that people are going to ask too, right? They're going to say, what are you talking about? It was more than 14,000. That's the difference in the logarithmic chart, right?
Yeah.
Versus the standard charting that people are used to seeing. And this is all based on percentages.
Well, no, I took it off log chart, so that's the actual dollars.
You took it off the log chart. So this is actually just stopping at, so this is the .com run up. Yeah. So can you adjust that to get in the last 20 years before?
Yes, that was the beginning. That was the beginning of the .com area, like 1999 or something like that. But the bottom of the current bull market started in 1982, which is in that recession period there in the gray. Yeah, right there.
Yep. Yeah, because
that's when Greenspan went out and told everybody that he was going to buy. They were going to support the low interest rates and buy bonds.
Then right here in 87, I bet this is.
Yep.
This is the Greenspan put.
Yes.
Yep. That's the day the music died.
Yep. And then look at what happened right at the end of that chart. Look at that straight up move. Just unbelievable. Absolutely incredible.
And that was parabolic at that point. And then you put current events on top of it, and it's even more earth-shattering.
Yeah. I mean, we doubled that because that's about 13,000. We're up at 26 now. So it's basically straight up from there, except for the .com era. But that first drop there from 8,000 to 6,000 is a 25% drop. And then we just kind of went sideways for I don't know how many years. I think that's it looks like about 1962 to maybe 1965 or so before we continued to drop down in the 70s.
Here, right, yeah. 65 to 69 or so, at least 4 years.
Yeah. Yeah, that's like 3-4 years right there.
Yeah, 69, it was definitely dropping into that recession. Or I wish I knew exactly where the line was for the year.
Yeah, let me see if I can refine this a little bit. It's not the greatest chart in the world.
Yeah, it's still chopped for sure after another drop down to 4, below 4, 3,500.
But I was thinking about this this morning is that what if we are only in a trading range at this point and we're never going to see a new high and we may not see a new low for years?
Very possible. Yeah, I could see that. With the manipulation and the lack of true price discovery like we talked about, Yeah, absolutely. They just move it wherever they want to, and they move it back and forth. If the government owns everything, and yesterday he said they're going to start doing less ETFs and more government junk bonds, that's just going to control them more.
Yeah, exactly.
Look at this ridiculous internals. When do you ever see stuff like this? This is crazy. Open it up at negative 1400, now we're positive 300. These
Wow.
massive bars. That's just weird. I am not trading today, that's for sure. I missed out on that morning session that everybody did. I wish I could have grabbed that short, but I'm glad you guys all got it. And you got out before it rallied up after, so good job to you guys.
Oh, here's a better chart. Okay, this is from stockcharts.com. It's still on a log scale, but it shows the trading range between the 60s and the 80s, which I'm going to draw a line on, and then I'll put it up in the slide.
Okay.
But I mean, it was a crazy time, and I think we're heading into that area. And they called it back then. They called it stagflation, which meant that there was no inflation, but there was also no inflation. There's no deflation and no inflation. And we just kind of went sideways here until we broke out in 1982. Okay, here we go. This is a good chart.
Okay.
Kind of shows that sideways. And so if we do, and I do believe that we have no more price discovery in the market. There is no price discovery. All right, so that goes all the way back to like 1900 through the present, and it's on a log chart.
Yeah, there you go, 1900 to 2020. Nice.
Yeah. And now you can see that period there from 66 approximately to 66 or something, 61, 62 until 1982 and 84, where it just went sideways. And then so we may end up seeing something very similar to that. Now that was 15-year period, 20-year period. After we made a new high, we kind of bounced around for a while before we broke out to the upside. So the 1929, 1932 scenario is on the left, where you can see where we had that sharp drop, a little rebound, and then a real sharp drop off to the bottom.
Oh yeah, right here. Yep.
But at this point, I think because of the Fed interventions in the early and kind of preemptive interventions that they've made, we just may be in this trading range for a very long time.
Yeah, he who controls all the chips controls the game. If they start to be on both sides of the trades, who knows what's going to happen?
Yeah.
What year was this? Here's so this one's.
That's the 08.
That's the financial crisis. Yep.
Yeah.
Here's .com, where it didn't hit the Dow as bad as it hit the NASDAQ, but it still dropped.
That was volatile. Look how volatile that was. That was not a straight line decline.
Right. Yeah. This is like a heart chart here for a second. Then it comes down.
It was really tough to trade unless you were just short NASDAQ stocks.
Yeah, look at these numbers. That's just ridiculous. They can't even read them. They're so squeezed in.
Yeah, 29,999 is the top one there. But it's crazy. But it's all, I wonder if you do that chart on a real basis minus inflation, it doesn't look it. And let me see if I can find that chart, because that chart looks like we've just gone sideways for like 50 years.
Yeah, because it's like the price of houses that George talks about. People wouldn't believe that for 100 years.
That's right, yeah.
Adjusted for inflation, houses haven't changed. That's amazing.
Yeah, exactly, right? You think you're building up all kinds of equity in your house and stuff like that, but based on the ravages of inflation, really haven't increased real estate at all.
Which is what feels like might be happening with all of this stimulus money. And I even heard him say it again yesterday, where it's, well, if these people aren't going to lose their jobs and they're not going to get them back, maybe it's just better to pay them to stay home. And I'm like, are you kidding me? And so, yeah, people are making more money not working than they were. I know we've touched on that a few times, and it's still happening. So they're just continuing to print, and it's only going to lead to the inflation. It's impossible not to at this rate. It's just a matter of when it happens, because they can't just unprint them, or they wouldn't if they could, because the banks now control all of it. You're not going to get it back from the banks when they start pushing buttons and writing notes. And the other part I think we touched on a little bit too, I saw this yesterday, I was crushed. There was 3 million new accounts opened through Robinhood in the first quarter for people that are investing their stimulus money because they have nothing better to do. They're stuck at home and they're becoming day traders. And a 20-year-old somehow over leveraged his account or didn't read it the right way and saw that he was negative $730,000.
Oh my God.
Well, it gets bad though, Dave. He committed suicide.
Oh no.
Yeah. Because he didn't understand what he was doing. This is what people are doing.
Well, we talked about Hertz on Tuesday, and they halted trading.
I saw that yesterday again.
Yeah. They halted trading on it. Why would you put your money into a bankrupt company?
Yeah.
They reopened at 3 o'clock yesterday, and the stock dropped 4%.
Wow.
Again, another 4%. I mean, it's down already significantly, but that's terrible. I can imagine he must have been trading futures, because futures, I mean, if you buy an option outright, you're not going to lose money. You're just going to lose your premium if you're long options. But if a futures contract, if you let that thing go, oh yeah, you can lose a ton of money. And with the margins now, I mean, if he's doing even E-minis, the daytime margins are like nothing on Tradeovite.
It looks like he was buying options, but he didn't understand that when he would eventually close, it wouldn't have actually been that kind of a loss, which was the worst part about it is, so I don't know if he was trading options on Amazon or what it was. They were saying, yeah, he had 300 shares of this with puts, so that would have reverted back. But he didn't understand it. And he even told people like, yeah, I have no idea what I'm doing. It's like, what kind of business is this company in when this kid has zero income to even open an account?
Yeah.
He's a student.
Yeah.
With no income, he's able to get assigned $1 million worth of leverage.
That is an absolute shame. I mean, geez.
So I saw that. I just about fell apart. I'm like, are you kidding me? Look what's happening to this place.
Well, I told you that, I know somebody who works in an office, and everybody's saying they're buying stocks, and it's like, wow.
Yep. So you guys out there that know people that want to do it, tell them it's not a game. That's the other part that pisses me off about Robinhood is they're gamifying trading. Trading is serious, and everyone thinks it's a game and it's easy. So any student can do it. And now this is what happens. That boils my blood.
Yeah, I agree with you 100%. That is absolutely horrible. So that's the PSA for the day, because I mean, seriously, it's not a game. It's very, very dangerous, and they are gamifying it. You're absolutely right. They're turning it, and I think a lot of people, well, I mean, for people who trade crypto on leverage, how stupid is that? We don't even hear those stories. If you can't pay cash for your crypto without leverage, then don't do it. Do not leverage crypto.
Right.
Holy cow.
I would think, just at first thought, it goes back to the entire society of first being instant gratification, and the entire society now being a credit-based system just leads to destruction. A friend of mine's mom recently passed away. She was 84, so we were over talking to his dad, who's just crushed. And he was talking about, people wanted to give him a loan for something years ago. He's like, what are you talking about, a loan? He's like, I don't owe anybody money for anything. He's like, I never owed anyone anything. He's like, I wouldn't get anything unless I had the money to buy it. And I wish this country would go back to that mentality.
Well, who knows what's going to happen here in the future. And if we do end up having a 1929-32 style decline in the stock market, which is still has potential to happen, we're going to be back at that again. But you know what? People don't think about that anymore because credit and borrowing money has been such a huge part of everyone's lives.
Mm-hmm.
It's just natural to say, oh yeah, I'm going to borrow money to buy whatever I want.
Yep. I hear you.
That's why young guys and gals who graduate from college, they need stuff to fill up their apartment. So they get a credit card. You get their first job, they get a line of credit or a credit card. They buy a house, they get a line of credit on their house, home equity loans and stuff like that. I mean, they have no idea how dangerous that is. Yeah.
Yeah, so we reverted to some philosophical, so sorry guys. I'll get off my soapbox for now.
Very depressing sounding.
Didn't mean to crush your Thursday. But like you say, it's our PSA, and if people watch this, I only feel that it's got to be done.
Yeah, I mean, if you don't know anything about trading, boy, you better get an education. You better get educated.
Yeah, if you don't know what you're doing, paper trade for a year until you can prove you know what you're doing before you put any real dollars behind it.
Yeah. And then, trading futures on a very, very short time frame reduces your risk tremendously.
Absolutely, which is exactly why we designed that course.
Yeah, exactly. And TD Ameritrade really almost screwed me once. Did I tell you this story?
I don't know.
You have to cut out their name on the video. But a broker really almost killed me because what happened was I was trading in the 2008-2009 financial crisis, and I had pressed a button to place an order for a futures trade on the YM, and it never went through. I didn't get any confirmation, nothing. And all of a sudden I get this guy, I was out at a restaurant, and I get a call from TD Ameritrade, the broker, and he tells me that I've got an open futures position. Do I want to roll it over? I said, no, I don't have any futures positions open. He goes, yes, you do. You're short the YM. And I said, no, I'm not. How come it's not showing up in my account? He says, I don't know, but you're short. And I said, well, what's the status of it? He goes, well, you're up about $8,000 on it. I said, okay, close it out, please. It could have gone the other way.
Right.
Really badly. I was very, very lucky.
Well, if you would have known about it the other way, fortunately, at least most of these accounts these days will auto-liquidate you before you are underwater because of those problems.
Yeah.
But obviously, if you're holding options, that's not something that they do.
Yeah.
Things will wait till expiration if people wait till assignment times. So you're not always going to get saved by the bell, so to speak. But yeah, if you're doing futures and it goes the wrong way, they would probably got in contact with you a lot earlier.
I'm sure they would have, yeah. But at that time I was trading 30, 40 YM contracts at a time. And I could have easily entered a position which never got filled maybe later because at that time the volatility was so high. You press the buy market button or put in an order, and all of a sudden, it would just get hit because the volatility was so wild. But sometimes I put an order in and nothing happened. I think that's what happened. I put an order in and all of a sudden it's gone. It's like nothing happened and it didn't show up in my account.
Yeah, you think it's just a glitch? Oh,
early electronic trading, and man,
that could have wiped out your entire account easily.
Yeah.
But yeah, going back to, as you said, that's why we trade the futures accounts when we do for the short time span, because it reduces that risk.
Absolutely.
I like to be in control. I like to be in and out. We have much better technology these days, and if you don't believe it, you can always call the broker. Hey, I'm out of everything, right? Yep, you are. All right, thanks.
Yeah.
They will still answer the phone if you call them or hit them up on a chat.
Yeah, Dorman's pretty good. I've called them a couple of times on things, and at least through Tradeovite, they've been really good.
So while we had mentioned, we're just in a chop mode here for sure. We crossed the zero line and just kind of hovered around there. The volume's hugging the zero line. Everything's in the middle of the woods. Little movement up, but yeah, we're still, let me actually move this back to 80 and 20 here so I can see it. Just barely above the top. So we're in chop mode at this time for sure. Unless Powell starts to interview again and says some other fine words. We'll see what happens for the rest of today.
Hey, Sham. He says, "Are you still testing the buy-sell signal script for futures trading?" No, not anymore. It's too complicated to actually put into a shorter-term system. I think that I'm going to have to rework it. I'm going to have to completely rewrite the code. It's not working, but I'm going to try to make it very, very similar. So it's not going to be the same one that's on the spreadsheet. I'm working on something else. I'm going to have to do it off of price action. So, but I'll let you know.
As we take a look at our other indicators, just out of curiosity, we see these are very small numbers. We had a 2 on the New York side. We got a 3 on the NASDAQ side. So
yeah,
not strong SD or ST numbers at all today.
Yep, really, really small.
And look at this separation after the big sell-off late yesterday in SR1 and SR2 here. Big separation. And 7 to 5, we usually don't see very even. So yeah, lots of infighting today. 10 to 4 on the index, NASDAQ, NDX.
Yeah.
Go across the board. Where's our other BOP? I'll bring him over too.
And on the NASDAQ there, the Renko cloud is red and the Dow is green. So there's a little there's that separation too.
Oh, I'd switch that one to the daily. I'll bring him back over looking at the daily charts there. Yeah, look at that. Look at the Dow on the daily. Red, green, red, like you just say on the Renkos.
Yep. Yeah, shorter time frame. So it looks like the NASDAQ has become a little bit weaker than the Dow, but on the daily time frame, the Dow, right, has been underperforming the NASDAQ. The NASDAQ has just been on a tear.
And how long has it been since we've seen this? 0.05, 0.10, 0.05?
Yeah, that's much lower volatility than we've seen. Much lower price volatility.
Yeah, it's always at least a 0.5% or 3% move. Now we're right around hovering about 0 where we opened, or I should say where we closed. Interesting. We'll jump back these to the 10s. Yeah, it was the big turnaround yesterday where it was going happy, not happy, happy. That's today. Let me roll to yesterday when it just cratered. Big bar.
The futures have been down almost every single morning. Last Friday, well, actually Sunday night's trading, early Monday, we were down 1,000 on the Dow futures. Yes, Tuesday or Wednesday, and today we're all down 200-300 points. And now we've recovered just about every single session.
Something's announcing that's.
Yeah, something's going on. Let me see if I can find something.
I didn't see anything on the calendar for that. Because 9 o'clock was the last thing for the leading indexes.
Is Powell still testifying today? Is this a third day?
I don't show it on the calendar.
Oh, Supreme Court rules against Trump's bid to end program shielding Dreamer immigrants. Is that something that would move the market?
I wouldn't think so.
Yeah, I know.
But anything's possible these days. There's no more reality.
Exactly.
The question you ask yourself is there a spoon?
Boy, look at the NQ. Bounced right off of that pivot there and just pretty close to it anyway.
Yeah. YM hit the 20 SMA and moved.
Yep.
Well, they heard me talking about 0.0. They wanted to change it.
It's up Where are we? Oh, yeah. Volatility is the only thing that you can count on these days because, wow, jeez, what the?
Yeah, she's going to the moon now.
Yeah, volatility is the only thing that you can count on. You can't count on direction. There is no price discovery anymore in the markets. The only thing you can count on is this back and forth movement.
Yeah, so there's your manipulation before a move up.
Yep.
But
Exactly.
now the Qs are running into this. I saw this earlier too, where the Qs, both the NQ and the ETFs themselves were running into that person pivot, which is definitely a resistance point, and they honored it a couple times. We'll see if it breaks through it or not this time. When they line up double, it's usually a stronger indicator as well. I'll squeeze this down so you can see it a little bit easier since I had it on my other screen.
Boy, they brought the Qs right up to that pivot, and then they sold them off again. I think that, like I said, there's not really much price discovery going on. It's just a massive free for all.
Well, how long until all of it is just in the Treasury Department or the Fed's account, and they just own everything?
We're getting close. I don't know what the Fed's balance sheet is now, but it was what, 7 trillion just a short time ago, and before that, before the health issue we're having now, it was 800 billion.
Yeah, right.
And now it's 7 trillion.
It's going to be 10 before Christmas, maybe 20.
Yeah, I wouldn't be surprised.
Look at that.
If Chairman Powell is listening to us today, I would make a recommendation of buying cryptocurrencies, please.
Well, he does message me offline and says it's a good video, so I'll let him know.
Yeah, please buy some crypto. Start that market on fire. Andre says, why do you think we can still do short-term futures trading if there's no real price discovery? Movement. That's the only thing that is going to work. You can see that they're bouncing off of pivots. So on the low end and the top end, look at the Qs. Perfect bottom on the lower end of the pivots and top end of the pivot. So that's about the only thing that you can really do at this point to make money in the markets, I think, is do those short-term MES or MNQs.
Yeah, it's watching that momentum, watching the volume like we saw in the class, Andre. That's what we're talking about. So just using the indicators that we have as the best for the short term. The long term is the hard part, where until you're leveraging the midterms with the price action profit, when you can look at those equilibrium points and make decisions based on the price. So it's less around old school and more around what we can track. I think that's what he was getting to. Go ahead.
I don't know if you've been watching the US dollar. US dollar has been up over the last few sessions.
Yeah, more demand.
Yep. I'm tracking UUP is the ETF for that. Here's the thing, though, it's interesting. We had this discussion a couple weeks ago about why we trade in the first place, and it's because we want to increase our purchasing power. And so just holding US dollars, as long as the dollar index continues to go up against another basket of currencies, you're going to increase your purchasing power. But if we have greater inflation, obviously, it's not going to keep up with inflation. That's why we trade, increase that purchasing power. But, if there was a currency that did not debase, is there a single currency anywhere in the world that has not debased their currency? Any country that has not debased their currency?
Nope, hasn't happened.
Yeah, I don't think there is one. There isn't any. And so what's happening is all the countries that are debasing their currencies are doing it faster than the US dollar. That's why the dollar index is starting to go back up again. Everybody else is debasing faster than we are. Now, Swiss francs, the Swiss franc is debasing as well. They're printing money just like everybody else. I kind of thought that too, Andre, but they're not.
And especially when you look at it from a historical perspective, take into account all the time of all fiat, there's
Yeah,
never been one that hasn't debased and hasn't failed.
yeah. If there was a currency, if there was a country out there that did not debase the currency, that had it backed by gold or something like that, I would just put every dollar into that currency. I mean, there's no way I'd hold U.S. dollars, but you got to go DXY colon IFS or something like that.
I was going to say it was acting like a funny chart there.
No, it's not. Yeah, you got to go DXY colon, and then you'll see the IFS pop up, and that's the dollar index. Hold on just a second. I got to take this call, guys.
Oh, we got the bat phone. Look at that gap down as he takes a call. So that was Tuesday. Wow. And now it's coming back up today. We'll shrink this back down. Let me look at this on a daily chart. That's probably Powell calling him. He heard us talking. Look at that volatility. March 9th, right around when this whole event started, just rocketed up. But then it reverted back to where it was before then, this major gap down just 2 days ago. Wow. That's interesting. I don't track this as much as Dave does. I have to keep looking at that. Would gold itself be that? It very well could be, Andre. It's just depends on, most likely it'll be a basket and not one thing. We'll see though. Depends on what this next global group decides. Because between what we've seen over time, it was the way back where there was a silver standard, and then there was a gold standard, then we got removed from the gold standard, and there's the Bretton Woods, then that's done. Now we basically just been on the faith standard is what it is right now. And it's only a matter of time. Whether it's going to be this year or in 5 years, that's the part that's unknown. Because since the entire world, or the difference being when we were the world's reserve currency, that changes the game. So it's not as easy to just remove that and say, what's our new standard going to be, until they figure out. And I think yesterday was one of the first times that Powell actually talked about in his little interview that he had, was around cryptocurrencies, where he was saying he doesn't believe the private markets should have any part in it, but they want the central banks to be the ones that issue digital coins or digital currency. So we'll see. I don't know if they're just trying to stave off what the private sector has done and kind of give them more time. I don't know. I don't know what's in his head. Obviously, we try and translate what he says to what may be true, but that's definitely one of the things that I saw was interesting, because he actually talked about it and it became more, open. Like, yeah, central banks need to make some digital coin, but not the private sector. So we'll see where that goes and what they might try to be the world reserve, whether it's, the petrodollar is the biggest thing right now, and how everything is created in USD, and how they make that transition will be interesting. And Dave's back. He had his bad phone call.
Yes.
It's like, oh, he's talking about cryptocurrency now. And Paul, I was just mentioning how Paul mentioned that yesterday, how he doesn't think there should be anybody in the private sector, right? And the central banks are the ones that print money, and the private sector shouldn't print money, basically. Right.
Yeah, that was kind of weird.
Tim says, even though they're flooding the system with money, right, there's still way more. Oh, yeah, exactly. That's all they do, and it's just going to create inflation.
Well, they're trying to create inflation, but boy, they're having a tough time. Even after the 200 trillion that they put into the system are so far since last September, they're just not. They're not pushing the inflation needle up that high.
So what do you make of this major gap down 2 days ago?
I don't know what the deal is with that, and I contacted Thinkorswim support. There's no gap. If you go to
Really?
Yeah, there's no gap. It must be a reset of the contract or something. I'm not sure exactly what that is. It says cash, but if you look at UUP, there's no gap. There's no $2 gap on there.
So is there just a longer bar somewhere else? Let me compare UUP.
You know what? I just don't think that they're doing it correctly. I mean, UUP is exactly the same, and they just had that. It was just a downward move there, but there was no. There was no gap. It was traded the whole time. Maybe it was the weekend. Maybe it traded down over the weekend, and that's why. But no, this is the ETS, so it would have been trading during trading hours.
Right.
So I don't know. But anyway, since the bottom there, near term, it's kind of been rising. I don't know what the deal with the dollar either. But yeah, I have been watching that DXY until I saw that gap, and I said, something screwed up with their feed.
Interesting.
On TradingView, though, I put in just DXY, and I get a good number, and I get the data. I think the data is better.
I don't like it when they have inconsistencies.
Yeah, I don't like that either. I don't really trust a TD Ameritrade when it comes to certain symbols. And also, when the market gets really, really busy, TD Ameritrade data feed gets really slow.
Yep.
And it lag behind Tradovite or something, real time when I'm trading futures. So you got to be careful with those signals as well.
Yeah, I did see discussion of that. I forgot to mention this on Tuesday where I had an email that morning where someone was out there like, hey, I'm looking at this and Tradeovate's 15 points different. Is it a lag or whatever? I said, right now, I think there's some people that are still looking at the old contracts because the other ones expire tomorrow. So it's like, make sure you're looking at the U's and not the M's because that's probably your difference.
Yeah, absolutely.
Yeah, watch out if anybody has any positions open, pretty much the entire market's already rolled over. And if you're holding anything in the M's, they will expire tomorrow.
Yeah, you definitely want to be out of those.
You don't want to do that.
If you're in it today, get out and roll them over if you're in.
Unless you got a lot of money and you can actually fund that.
I don't know.
Leverage.
That'd be reckless even if you did have a lot of money.
Right, exactly. Yeah, don't do that ever.
So if you go DXY on TradingView, you'll get a good chart. You get a really good chart for that. Oh, the two issues that I mentioned last time, IPO and MGI, or IPO and BETS, BETZ.
Yep.
They're all up. I mean, they've been up for a couple of days since I mentioned them. Really, really nicely too, actually.
Nice.
Yeah, I'm not sure I'd stay in either one of them right now, but they have been up nicely.
So I'm assuming this defaults to a daily. And this was a couple days ago, or do I need to? No, that's not
right. Just go to a chart, go to a full feature chart. That should that's pretty decent too. But the full feature chart we can do, and then you can change the line to a next to the defaults to a daily. But right where next to the D up there, you'll see the change. Yeah, you can go to candles or bars. Yeah, there you go.
Yeah, that's weird. How do you compare that?
Yeah, I know. It looks like they missed like 7 days or 10 days of trading.
I'll put those side by side.
Okay, TD Ameritrade, you need to clean up your data feeds here. See, in times of look at that. There's like 7-8 days of trading that they completely missed there.
I noticed, I think it was yesterday, the NDX was way behind for like a half a day as well, where I'm like, what's going on here? The chart's not even showing it. And all of a sudden it painted in. I'm like, oh, where'd that come from?
Yeah.
Yeah, I think you're definitely right on there where it's something, they got issues with their feeds. So yeah, let me get this out of the way. Yeah, go away.
Yeah, because from that point which is what date?
15th,
Right. And that's
right there.
yeah, it's not even close. So, yeah, it's like very strange.
Yeah, we go from 99, 98.9 on the 26th. Well, yeah, what happened here? Look at this. That's
Yeah.
526 down at the bottom.
Yeah.
Then the next day is 615.
Yeah.
What?
Well, we just decided to eliminate about a month there.
So yeah, here we go. That's their gap. So here's the 26,
And no worries.
the same number. Then the next one they show you is here. Don't worry about this. Nothing to see here. Wow.
That's pretty funny. Tim says, how about the statement from Giancarlo about XRP and security status? Yeah, that was pretty cool. What's funny is that obviously some people are just saying that, hey, he's the counsel to Ripple. And so you can't trust anything he says. Well, let me tell you that this guy is the former CFTC chairman, and he's kind of going to ruin his reputation or his integrity by saying something that he doesn't fully believe is true, whether or not he's a counsel to Ripple or not. The guy has too much to lose by being totally one-sided and biased. So he's looking at it. If he read the full article, the guy is as objective as possible. So it's pretty cool. But it's good news, and there's two things that are good news, actually. One is Giancarlo, who is head of the Digital Dollar Project, is actually a counselor, a lawyer for Ripple. Now, here's a guy he can pick up the phone and he can call Powell, he can call anybody he wants, anytime he wants. And he is in charge of the Digital Dollar Project, and he is on retainer for Ripple. So that's good news. That's great news. The other thing is that he went through, and I have to think about the timing of this article. Why is he coming out with this now? I think there's got to be a reason behind it. And I have no idea what that is, whether or not Ripple's going to do an IPO. Maybe he's providing guidance for the judge who's deciding on the case in California about whether or not Ripple or XRP is a security and whether or not Ripple sold it as a security. So I don't know. The timing of it is kind of interesting. So I think there's a lot behind it. And for me, from my point of view, it's all good news. It's really, really very, very bullish. The price hasn't moved, though. One of the things that he did say in there was, look, Ripple has been selling software and they've been doing great, but the price of XRP is down. So they're really two separate things. The price of XRP is not correlated to the progress and the growth of the company.
And the company does more than just creates the coin.
Yeah. And so that was very, very positive. Yes, it's key for the price to stay down for the separation. Absolutely. He can prove without a doubt that there's no relationship between the two of them. It's not non-correlated because the company's been doing great. So whether or not this has the timing of it, I don't know why he's coming out with this now, but I think the timing is important. Maybe we'll hear something about the case in California. Maybe we'll hear something about the Digital Dollar Project and maybe running across the XRP ledger. But this news, even this news, which was very, very bullish, did not move XRP's price for very long. I think we shot up from 19 to 19.5 cents or 19.7 cents. And that was it. Now it's down again.
So, yeah, yesterday, like 19.8 or 1988 was like the high yesterday. And then, now it's 1909.
Yeah, so it didn't really sustain the price at all, which means that we're still somewhat in a bear market, I think. It's a correction in a bear market. I think cryptocurrencies generally have been in a correction since 2017, a very long correction because it's a commodity. And so we're in that correction, and eventually, oops, where's my clock? Let's see. What about the fact, Andre says, what about the fact that they're saying they're not into cross-border payments so much anymore? No, they're still into cross-border payments. They're doing smaller values cross-border payments rather than going after the bigger ones. And that's okay too, because if you heard, there was the former SWIFT executive did a webinar with somebody, and they were asking him, and they said, you know what, even in SWIFT, the majority of payments are less than $1,000. I mean, he's talking like 80-90% of all the payments that SWIFT sends are less than $1,000. So those are small value payments being sent. They're not the big $100,000 million payments that you think. Most of them are very, very small. The average is 100. Most 90% are below 1,000. And that's the market that Ripple has always gone after, and that is Swift's business. And so they know those stats, and that's why they're going after it, I think. But we'll see what happens to the price. The price has to move. I want to see the price move. I don't think we're going to get, I did a Fibonacci time analysis. We don't have a lot of time to get into it. You probably got to run, but you can do Fib analysis on the price, but you can also do Fib analysis on the time. And I did a Fib analysis on a couple different time frames, and they were all pointing to July 15th to the 20th. Just FYI. Yeah.
Well, we could cover that on Tuesday.
All right, sounds good.
We'll save that be your little your carrot to come back.
Awesome. Yeah, a little carrot there.
And if you guys are trading, watch out. Look at this ridiculousness. The Dow just went down.
What are the levels there? 25.9 and
yeah, there's
971.
back to 50s.
Yeah, so
there's like a 100-point drop in 5 minutes. Now it's back up 75 points.
Yeah, that's insane. Andre, what points to July? It's the cryptocurrency bull run that I'm projecting here using time, Fibonacci time.
So come back Tuesday and we'll learn about Fibonacci time.
Yes.
Put it on the calendar.
We'll do that analysis.
Trade safe.
Find us, Andre.
Andre's always here. We know he's good to come back.
Yes.
Dave, I appreciate your time once again, sir. It's been a fun, interesting week, and we're not even done with it yet.
It is fun. It is fun. Tomorrow morning, Brad on Investment Perspectives is going to be back. If you guys could join in on tomorrow's show.
You coming in? Nice. Yeah, I've missed you on there for the last couple of weeks. I know Brad's been busy.
He's been doing the documentary editing and laying down some tracks because he's a musician and he's been doing some tracks for it. And so we're going to be back tomorrow.
Right on. Well, I'll make sure I'm on there and see what's cooking on the latest with Mr. Kimes. He's always a good time as well.
Eastern time. So if you guys join us on the live show, let me know and I'll shout you out.
Get on the big stage. Put your nice hat on.
I'll be outside again, I think.
There you go.
Unless it's too hot. We'll see.
You're welcome, Tim.
Yeah, thank you.
All right,
Sham.
Yeah, go ahead. Oh, stretch it out. All right, gentlemen. Have a good day. See you, Dave.
Take care, Dan. Have a good weekend, guys. We'll see you Tuesday.